Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm really glad to have you guys here. Now, here's the thing. Deutsche Bank's on the rocks. I want to talk about that during this show. And maybe a little bit of the ramifications this is going to have in our very near future. Let's get started. Let's open up the charts right here and take a look first at silver price. What we're looking at right today is 1505 bid, 1515 ask. It's up 8 cents on the day. If you can see right here on the chart, you can see 2 days ago, it made that tremendous slide downwards in price, and we've made half of that back, basically. So we're in a better position than we were after that slide was concluded a couple days ago. We're up a little bit more, but let's take a look at gold. Gold is at $14.01, so gold's made it back above $1,400. $14.02, I think, is the spot price for gold. But here's the thing: gold's up $3.10, so we're back up above $14, which is good. We're going to take everything we can get with gold and silver because we've been in this bear market for a long time. It's not really a bear market, to tell you the truth, though. If you go back on the long-term charts for gold and silver, you'll see that we are still in the bull market. It's just that it's a downwards area in the bull market, but we're still actually in the bull market. It just hasn't taken off yet. You have to look at the long-term charts, and I'd have to show. Maybe I'll do a show and show you guys exactly what I'm talking about, that we're actually still in a bull market with gold, even though that's hard to believe because we've actually suffered downward spiral in prices from 1900 down to where we are now at 1400. And the same thing with silver. We've suffered down from like $50 all the way down to like to where it is now, So silver's taken a bigger hit than gold. Gold's fell from 1900 to 1400. But this shows this hit that gold has had has not been as big from 1900 to 1400, and silver's come from 50 all the way down to 15. That's a bigger move from 50 to 15 than from 1900 to 1400, and this shows in the gold to silver ratio. And this is why silver is so important right now. One of the reasons is this gold to silver ratio's changed. It went to a very, very high level right now, and it's not going to stay there. It's gonna go back to a more normal level, and this is going to give you a little bit of an advantage over gold. Not a big advantage, but probably your silver's going to double in price. So silver's going to when gold just goes up from 1400, it goes back up to 1900. Silver is going to perform better because of the gold to silver ratio. Let's take a look now at Bitcoin and see what it's doing today. Bitcoin is strong right now, and it's picked up a little bit. It's picked up 4.23% on the day so far. It's at 11,797. Let me just refresh the page real quick. 11,851. So it's moving up right now, 4.67% on the day so far. Now let's take a look at cryptocurrency market capitalizations. And what we're looking at here in cryptocurrency market capitalizations is 335.6 billion with a Bitcoin dominance of 62.9%. And we're seeing the Bitcoin price and price of the altcoins moving up today. Yeah, there's something that's going to affect. I'm going to talk about this on my other channel, probably today or tomorrow. The dangers ahead for cryptocurrencies because of the recession. The recession could throw cold water on this party, quite seriously. And we're going to talk about that on my other channel. So if you're a cryptocurrency investor, go to YouTube, type into the search engine Delta Report, and you'll find my other channel, the Delta Report. And I'm going to talk about this in more detail on my other channel, about how the recession could throw some cold water on cryptocurrency. Let's take a look now at the Dow Jones Industrial Average for the day. And this is not unexpected for me that it's down 168 points. 26,753. Down 168 points. This is not unexpected. The market knows about things like Deutsche Bank. Thing about Deutsche Bank is, I don't think Deutsche Bank's collapse is right now. I don't think it's going to collapse just yet. Let's take a look now at crude oil. $57.69 for sweet light crude oil. It's up marginally on the day, just up a little bit. Crude oil's bouncing around like a ping pong ball today. Let's take a look at U.S. Treasuries. And what we see here is we see the Treasury yields falling across the board. You know, the Treasuries have been doing one day up, and then the next day fall. One day up, next day fall. They basically haven't been moving as much as they were. But we still have the yield curve inversion, and it extends all the way out to the 10-year. That 30-year is still the last holdout to the yield curve inversion. But today we saw the yields on the 30-year drop 3 basis points, 3.3 basis points. Look at some of these yields, you know. Really, if you look in the middle of the yield curve here, 1.81 on the 3-year, you know. And it's fell today some too. So now let's take a look at the U.S. dollar index. And we're seeing 97.33 on the U.S. dollar index. And the U.S. dollar index is staying strong. This is partial fulfillment of the milkshake theory. You ever heard of that milkshake theory? Well, anyway, a lot of you have. But at any rate, the dollar for the global financial system, it's not really right here in their vision yet, the cryptocurrencies. They know about gold and silver. They're not really buying into gold and silver because they're not frightened yet. There's no real calamitous events happening within the financial system just yet. And so they show you which way they're going to go ahead of time. Whenever they get a little bit frightened and stuff, you see the gold price go up. Right? Then their fear goes away the very next day. You see the gold price go back down again. But they're showing you which way they're going to go when the real fear comes. When the real fear comes that it's not just a false alarm anymore, that something really big's happening within the financial system, like Deutsche Bank just went down, or Great Britain, United Kingdom, just left the European Union in a hard Brexit, or Chinese has some sort of problem within their financial system, and that China is collapsing. You know, basically, some problem like that comes along, then it's not going to be just a tentative one-day run into gold and the next day dump again, you know. It's going to be a move into gold that's going to be much, much larger by a much bigger group, and it's not going to be a one-day thing. It's going to be an event that plays out over the course of the crisis that's created within the financial system. That crisis is coming, and I think it's going to be a compounded crisis where not just one of these events happen, that multiple ones of these events happen, like simultaneously. And I think it's actually pointing toward this fall. I think Deutsche Bank's going to hang on. I'll tell you honestly, I think they're going to hang on by the skin of their teeth through this restructuring for a little while farther while their stock prices decline. Let's take a look at Deutsche Bank today and see what it's doing. 6.81. Their stock price has declined. It's declined 5% today so far, you know. But I think they're going to hang on. I think they're going to hang on into this restructuring for a few months till it's proven beyond a shadow of a doubt that this restructuring is not working. And then I think it's going to fall off a cliff, and the bank is going to finally be done. It's going to be the Lehman moment. But I don't think we're quite there yet. I think that they got a few breaths left in them before they finally roll over. That's what I think. And so I think what it's pointing to is I don't think they're going to make it through this fall. Deutsche Bank. Somewhere this fall. Everything's pointing toward this fall. October 31st, Brexit is going to come due again. Right? I'll tell you, around that time of the year, it's a very interesting time of the year. Because going back to a cataclysmic event that occurred in human history thousands and thousands of years ago. It was recorded in the Bible as the Great Flood. The flood, the time of year it occurred, was right around Halloween time. That's when it occurred. And this is a momentous time of year, this particular time of year in the fall. And all of these disasters and stuff are kind of pointing toward that, like all of these things coming due, it's kind of rolling into that area, you know. We got China's economy rolling over. That's a big one that they're not talking about any. But these things are slowly all rolling over simultaneously into what I see as possibly being a perfect storm coming probably what it looks like around this fall, you know. And I'm amazed we made it this far. I'm going to tell you, the Federal Reserve, it's amazing that they've been able to hold this system together this long through using all their different tricks, you know. But at this point, there's not any tricks left in their bag except one. They got one trick left in their bag. They've used everything else. They've done everything. They've reached a point now where they're cornered, and they have one trick left in their bag, and that's creating massive amounts of liquidity and injecting it into the system. That's the last trick they got left. And when they use that final trick, that's what's going to cause the runaway inflation. But they're going to have to use that final trick. And it's like a light switch. That final trick that the Federal Reserve can use is like turning a light switch on and off for gold and silver. Because when they use that final trick and they turn that light switch on, it's not on yet, but when they turn it on, the Federal Reserve, then you're going to see your gold and silver prices shoot upwards. Cryptocurrency is going to take advantage of this too in a huge way. But until they flip that switch, we're going to remain in markets that are kind of like, especially the gold and silver market, where it's bad, and it could even get worse until they flip that switch. It could get worse for gold and silver. We could see declining prices on gold and silver. But here's the thing, guys. The downside risk on gold and silver is limited because of the cost of mining production. Now, if we take a look at cryptocurrency, there's a much greater downside there. There's a lot of risk with cryptocurrency, more risk than with gold and silver. But the potential upside for cryptocurrency is basically unlimited, you know? So you have to accept the risk with the downside. Now, I'm going to talk about that a lot more on the show I'm going to do. Let's take a look now at Deutsche Bank, and we're going to zero hedge, and it says the Deutsche Bank that you all know is no more. Basically, they've hauled out of equities during their $8.4 billion overhaul. They exit equities. This is huge. This is why the price of Deutsche Bank stock is falling today, big time. And you know, I wouldn't touch, even if I was a billionaire right now, I wouldn't touch Deutsche Bank stock with a 10-foot pole, because you know, everybody thinks, a lot of people think, well, they're going to come rescue Deutsche Bank at some particular time. I don't think Deutsche Bank's going to get a rescue. I think it's going to go down, and then the cards are going to fall where they may within the financial system. I think it's going to cause more collateral damage than most people think. I think there's an entire possibility that it actually could lock up the financial system for a few days or weeks. And to unlock that financial system, that's the Fed's going to have to flick that switch. That light switch I was telling you about. And turn on the final tool. Final tool they have is money creation. And they want to do it anyway. Because the United States has over $100 trillion of unfunded liabilities. And this way, once they flip that switch, once they give in, once they finally yield and say, okay, here, we're doing it. You know, at that point in time, then they're going to be able to pay everything. They're going to be paying everything in dollars that are practically worthless. That's basically where this is all going in the end. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.